Hi, my name is Rajesh, and I welcome you. I'm excited to have you here for the first step in your journey into stocks and options trading. It is exciting. My goal in this course is to simplify investing and trading, making it easier, interesting, and practical, even if you have zero experience in the stock market. Let's start at the very beginning. What is the stock market? Simply put, the stock market is a place where investors buy and sell shares or ownership stakes in publicly listed companies. Don't worry, it's not that complex. Think of it like a marketplace where stocks of companies like Reliance, TCS, Infosys, Apple, or Microsoft are traded. When you buy shares, you literally become a partial owner of that company, however small your share might be. Now, let's quickly understand the types of stocks available. There are two main types: common stocks and preferred stocks. Common stocks are what most people mean when they talk about stocks. Owning common stocks gives you voting rights and potentially dividends, but dividends aren't really guaranteed. On the other side, preferred stocks usually come with fixed dividend payments, and get priority over common stocks if a company pays dividends. However, preferred stockholders typically don't have the voting rights. Stocks are traded on platforms known as stock exchanges. Popular exchanges include, in India, National Stock Exchange, we call it as NSE, and Bombay Stock Exchange, BSE, that's where the Sensex comes from, and there are other exchanges also. Globally, New York Stock Exchange and NASDAQ in the United States. These exchanges provide the necessary infrastructure and regulations, very important. Ensuring trading is transparent, another important thing. Fair, it is fair trading and it's efficient. Essentially, they make sure buying and selling transactions happen smoothly and securely. You may have heard a lot of stories about people going bankrupt or some people making a lot of money. You would have this question in your mind that why do people invest in stocks if there is so much of risk? People invest in stocks for various reasons. First one is growth potential. Historically, stocks have provided one of the best opportunities for wealth building over time. There are people who have made 10x, 20x, 100x also. The second one is the dividend income. This is a steady income. Some stocks regularly distribute a part of their profits as dividends, giving investors steady income. Third one is liquidity. Stocks can typically be bought and sold quickly, offering ease of access to your invested money. Take an example that you have some stocks in your demat account and you need money right now, so you can quickly sell them and get the money back into your account. The fourth one is ownership and influence. Owning stocks makes you a shareholder with potential voting rights, not with every company, influencing company decisions if you hold large number of shares. It's essential to clarify two terms now: trading and investing. Trading is buying and selling stocks frequently, often holding them for short periods from minutes to weeks, aiming for quick profits from price fluctuations. Investing, however, involves buying stocks and holding them for long periods, sometimes years or even decades, to gradually grow wealth as companies grow over time. Our course will mainly cover trading, but understanding the principles of investing is important too. Lastly, in this module, let's discuss how stock prices actually get determined. It's largely about supply and demand. If many investors want to buy a particular stock because of strong company performance or positive news about that company, its price generally goes up. Conversely, if many investors want to sell because of poor performance or negative news about that company, the stock price typically goes down. Other key factors affecting the stock prices include earnings reports, economic indicators that includes inflation, interest rates, industry trends, and global economic conditions. Essentially, stock prices reflect what investors collectively think a company is worth at any moment. Wonderful. That's your foundational overview of this stock market. You've learned what stocks are, how markets work, and why people participate in them. Take a moment to digest this basic knowledge. This is the building block for everything else we will cover in the upcoming modules. In the next module, we will dive deeper into the basic concepts, including how to read stock quotes and interpret key financial terms that every trader must know. I'll see you there. This is going to be fantastic and fun.